Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. We have the one and only and typically Monday guest, but when we get a 9 handle on CPI, we got to bring him back, Mr. Greg Dickerson. How you doing, sir?
Doing great, Michael. How are you doing today?
I'm doing well, and I want to give you kudos, props, applause, whatever you want to call it. You called actually in our last series of Monday interviews the 9 handle. I didn't see it. I thought 88, 89. I did not see 9, let alone 9-1. You did. So I got to ask, now what? What do we do now, man? 9.1 CPI. Oh my goodness. What's going on?
Well, so the good news is this could be now plateauing as we've seen commodity prices coming down, gas, lumber, building materials, things like that. We haven't seen it so much in food yet. And we're still going through the summer, price hike on food, meat, things like that. You still have pandemic concerns out there with China. As soon as they come out, they start going back. This country, we have things, ramping back up with COVID again. So as long as supply chain issues remain, under control, I think we can see now inflation start to plateau with those other things. But, if oil reverses and commodities reverse and those types of things, it's going to be the same old song and dance. But I think you'll see the 8s next time. If you look at, because what we saw was June, that was June's numbers that came out today. So we're going to report July numbers. And a lot of things are up right now just because of the summer, but fuel is a big one, but it's really the only thing that's down, and it's still twice as much as it was. So you might see 8.8 next time, 8.9, but it's not going to get in the 7s yet.
No. So we got a lot to go home. And again, it's what I really am following is again, as an economist and watching the Fed now for 30 years, the Fed really does focus on core. Right. So the headline, right, is headline and core. Headline's 9.1, core was 5.9, right? They were expecting 5.6. So that was even up. What I've never really thought about, or at least it's been decades since I've thought about it, is the gap between headline and core, right? We're talking, what is that? It's like 3.2%. That's the largest gap I remember. Because again, what is in headline that's not in core? It's really gas and food. And headline is screaming. And why is headlining important? That's what you and I care about. That's what's crushing the poor. This regressive tax is just sapping people's incomes, reserves. It's just not a good time, right? I think the consumers are already pulling back. Again, consumers are the heart of the economy. I think they are. I think a recession, official, like deep dark recession, starts Q3 2022 right now. Q1, Q2 won't be called a recession, technically speaking, because of jobs. But boy, Q3, Q4, not looking good.
Yeah, it's tricky. And, that core number, that's silly too, because it's a lot higher than what they're reporting. I don't know how they're measuring it. And, Powell at the last conference that he was at in Switzerland, I can't remember what it was, but he was speaking and he said, look, our models are wrong. Yeah. He said, our models don't account for the things that we're dealing with these days, like a pandemic or, the other things. And I mean, you have to look at headline because it takes everything into account. And, they're still not catching rents. I mean, they're still not catching, housing costs in terms of the expenses to keep up a house. Everything's gone up. I mean, if you hire these things out, landscaping, pools, pool maintenance, all of the things that you need to take care of your house, and then all the materials you're buying to keep your house up. And then, the biggest issue, obviously, we're a consumer-driven economy. So gas and food are the 2 biggest items that are going to affect your spending. And that's why I knew it was way hotter than what they were saying. The economists have been wrong the entire time. The Fed's been wrong the entire time. The Treasury Secretary has been wrong the entire time. They're not paying attention to what really matters. And what really matters is, who do you know right now that has not changed their behavior because of what's going on?
Yeah.
I mean, people I know at the upper, extreme ends of wealth, 9, 10 figures, liquid, have changed their behavior.
Exactly.
All the way down to the person that's, making $500 a week or whatever it is. That's the most extreme behavior change. And that's a lot of times that's who, the biggest spenders are in terms of, consumer driven GDP numbers. So everybody recognizes what's going on, and everybody knows inflation is a lot higher than what they've been saying. And until you see people start to say, it feels like I have more money every week, you're not going to see inflation taper. But the good news is we could be peaking. And when inflation peaks, markets bottom. So we still have the Fed's response to this, and we can talk about that.
That's the very next question. Yes. Yeah. So let's go there right now. So we have a Fed meeting next week. It's funny. I have a 10-year Wall Street veteran on every Monday. Actually, it's after your interview. And first off, he's been wildly wrong. Taylor, you've been wildly wrong on inflation, buddy. I'm gonna zing you next
You
week.
say 10-year Wall Street veteran. How old is he?
He's I think he's 41, 42. So he has an
Taylor,
experience.
you need to look at the past, because again, most of the people out there have never been through a global macroeconomic downturn.
Totally agree.
And they just don't know. So, I mean, I see all kinds of people saying, inflation peaked last month and
or the
it's going to be 8.6
yeah.
this time, and markets have already bottomed, and, no more downside. Look, these things take months and years to work out. It doesn't happen overnight. That's the biggest lesson learned. If you look at look at even the March 2020 bottom, we shot out of it quick, but that was still a 2-year process, 18 months to get down and get back up. So these things don't happen overnight. They take time, and these are big, butterfly effects around the world this time.
Exactly. Yeah, the dollar, and so there's so much stuff to talk about. First, we got to get to the Fed's reaction. So where I was going with this is 2 weeks ago, there's the Wall Street was predicting a 50 basis point cut, and I laughed in Taylor's face. I said 75 all day long. Now it's very interesting. Now it's 75, and they actually, just as of this morning, latest and greatest bet, there's 30% bet they go to 100. So when you look at what's coming next week, Powell's penchant for telling the market so they're not surprised. Do you see? I got to assume you see at least 75, but do you see him surprising with 100 next week?
Well, they won't surprise. So, we have 2 weeks before they meet. So they will telegraph just like they did last time. So probably this week, we will get an indication of what they're going to do. And if they're going to do 100 basis points, it will be
they'll tell us. Yeah. Leaked.
Yeah. They'll just tell you. So 75, done deal. That's just done. Done deal. I think the chances of 100 based on earnings, we just see what earnings look like and those types of things.
Big banks start tomorrow. Yeah.
They've said we are going to fix inflation. What they did last time hasn't put a dent in it and went up. I think 100 basis points. I think you'll see more than a 50% chance by the end of the week.
Wow.
So we'll know probably by the end of this week or next week. They will send the signals what they're going to do, so the markets can unwind in ahead of that. We're seeing a little bit of volatility today, but the whole caveat is, what's the Fed going to do?
Exactly.
And if we get 75 to 100, markets will drop a little bit. If they don't, if they didn't do that, the markets would tank.
Oh, absolutely. Oh my goodness. Yeah. Well, then I think the really interesting thing for me is they actually don't meet in August. They have August off, if you will. The next meeting after that is September. What I'm calling right now is 75 in July, 75 in September. And again, that'll take us to 3%, right? We're at 1.5 today. So 275s get us to 3%. And we still have 2 meetings after September. So
which is taking you to their benchmark. I mean, their benchmark's 3.5, right? The little dots.
The dot plot. Yeah, it could be. Yeah. I mean, we could be at 4 by the end of the year. I mean, it's feasible to think about, right? 275s and 250s, you're at 4.
Yeah. And I think, so the credibility is what's on the line here, because they've made huge policy error. They're behind the curve. The markets are leading the Fed. So if they go 100, they have to back off potentially, next time. So the question is, do they want to do that? And they could telegraph that. They could say, look, we need to get control of this. We're not meeting in August. We're going to go ahead and hit it with 100. Then we could possibly back off, after that.
Maybe. We'll wait and see, because they'll actually have 2 months of data, because again, they don't meet in August. So maybe.
And he never gives that kind of guidance in terms of what we're going to do in the future. He just says, this is what we're doing right now. We're monitoring the data. We're going to be nimble. We're going to be
data dependent. Yeah.
Right. Yeah. So you could see 100 because they're not meeting in August.
Yeah, maybe. I think that's a good call. Yeah. Let's be clear. I'm going to say it until it happens. They need to do 100. And frankly, I think they need to do 100 today. Just stop the madness. After the market closes, pull out the script saying we're doing 100 today. Let's surprise the market. But he wants orderly, to your point, right? He's very much the communicator.
Yeah, you don't want the markets to just crack, because then they have to respond to that. So you need an orderly soft landing. So you need an orderly, levels.
They don't mind it going down. They just want it to be orderly going down. Yeah. You're right. You're always right. Yeah.
Not always, but
more than most. More than most. So the last thing I think about is the consumer, right? Because again, the consumer's feeling this every day. And again, as you said, and I remind people today on the daily financial news, good times never last, bad times never last. Hey, folks, we're entering a bad time. But remember what Greg says. I really see the consumer having 2 reactions. And it'll be interesting to see what you think about this. Again, as we're starting this, first off, I think they're going to be mad and angry. And what does that mean? Well, we have a midterm election in November. And I think if I was a sitting senator or House of Representatives, I'd be very nervous. Either side. I don't care who you are, Republican or Democrat. If you're in office today, you must be nervous because you're going to get blamed. And I think the electorate's going to take it out on that. And then the other one is fear. It's people, when people are afraid, they retreat. A recession is almost a self-fulfilling prophecy. And they retreat from everything. And again, this is why, as you know, and we have talked about, the best deals are made in recessions. Because when everybody loves to say, I'm going to buy next time there's a recession, and then a recession happens and they're afraid and they do nothing. So let's talk about so do you think they're going to be angry and kind of take it out at the election? Do you think that's an emotion?
Yeah, people are already upset. You can already see the polls. So the current administration's to blame right now. That's what everybody is blaming. They're blaming the current administration. Biden's polls are record low numbers, regardless of your political beliefs.
Yeah, it just is what it is. Yep.
That's the reality of what's going on. So they've already lost this cycle. So, and they're blaming the Fed. They're blaming, Biden. So the thinking is, there's nothing they can really do now. They have to stay the course. Like, for instance, somebody, the thinking out there was, well, wouldn't the Fed pivot to try to bring things up for the midterm elections? Like, no, they're already lost.
No, done.
That's already gone. Midterms are already done. So what they're looking at now is the best scenario for the administration would be a deep recession, high rates, all of that stuff going into the elections in 2024.
Correct.
So then they can rescue. Hey, we're bringing down inflation. We brought down inflation. We're bringing the country out of recession. We're pump the markets back up, just like Trump did, right?
Yeah.
When he came into office. Hey, let's pump the markets. That's why we had the easy Fed and all that. Because they say, hey, we're not swayed by politics, but their job hinges on who's in office. So they have to do what they're told. And I don't care what Powell says. He gets called to Biden's office. He's been given a mandate. And his mandate is, you want to keep your job, you get inflation down. So
right. This is about 2024. I agree. Yep.
And the psychology of it, we talked about that before. So that's why Yellen and that's why the Fed aren't talking recession, because that can be a self-fulfilling prophecy, and it's happening. So people, people are mad and everything especially when you're at the pump and it's $5. Now it's eased up a little bit.
$5 is almost $7 where I live.
Well, so where I live, I filled up at $3.99 today. That's the lowest I've filled up in months. But it was still $100 to fill up, a Suburban, when normally that's $50. So people, it's not 125, but still 100, so still that's still offensive to a lot of people that are working paycheck to paycheck. Even at $100,000 a year and you got a family support, that's $20 you didn't have, that you could have otherwise had to put into the economy, do other things. So people are mad. They feel betrayed. They feel upset because they've seen Wall Street, just off the rails with all these bubbles. Now, on the flip side, if people owned a house the last 2 years, they benefit from it. Now they're watching that, kind of deteriorate slowly, but they benefited there. So, it's kind of been passed around, a lot of places. And that's, people had savings, they paid down some, credit and things like that. But now it's starting to flip. Savings are getting depleted. Credit's going up. Cars, people are turning cars in, like we talked about the other day. So, there's a lot of emotions going through people's minds depending on where they are. And I think, the lower end of the spectrum, that's paycheck to paycheck, they're feeling it the most. And that's where the damage is being done the most. The high end, what Powell's saying is, look, you guys, in this upper income with your house values and this, I don't care.
I do not care. Yes.
I got to help these people. So for whoever's listening, your house value and equity and all that is going away. He doesn't care. Now he can't affect, housing rates, and he hasn't yet, because with everything else that's going on between, recessionary fears and all that, the bond market's been reacting to that, and yields have been down, because flight to safety, right now. But once all that kind of subsides a little bit, those bond yields will go back up again, and that'll really affect rates in the housing market. But they're coming after housing.
No, yeah. So the last thing I want to talk about is fear, because that's a really raw emotion, and a lot of folks, as we talked about with Taylor earlier, this is their first go around with a deep, dark recession bear market, right? If you're under 40, yeah, sure, we had the March 2020 kind of V-shaped recovery, but that was nothing. That was nothing. What we are going through is kind of a combination 08.com kind of combination. And this I'm willing to say right now that I think this might be the longest recession of my adult life. This might be certainly 18 months. This could be 24 months of just a slow slog, to your point, coming out middle of 24 for that cycle.
Yeah, and actually that wasn't bad. I'm looking at it now. So it started February of 2020, and market came back out of the depths of the bottom
Yeah.
back to levels before the crash, August 2020. So
Yeah. It was
that
like
wasn't too
6
bad.
months. It wasn't too
Right,
bad.
but that was $2 trillion, and the Fed coming out saying we have an unlimited
Yeah.
budget.
That
We'll
was
buy whatever we.
yeah, that was the Fed doing things they never done. They bought corporates.
Yeah, and I'm looking
it,
at the charts while we're talking. So, the last time was 2018. So it started, the correction started January 2018, and we came out of it. That took a little longer, July of 2019 to, well, May of 2019. So that took, year and a half. But the big one is, 2009. That's what you really have to look at. And that whole debacle started. Really, it started, May of 07, bottomed March of 09, came back to May 07 levels in 2013. So, I mean, that's how bear markets, that's a real recession, real bear market,
Agreed.
And then the .com, same thing. I mean, you peaked in May of 2000. Bottom was September of 2002. Took 2 years to bottom. Yeah. And then, got back to those levels in 07. So that took, again, 5-7 years for that. That was the S&P. NASDAQ might have moved a little quicker. Let me look at that. NASDAQ was more, March 2000, bottomed September 02. So that took 2 years, even with that big blow off bubble. And that's kind of where we're at right now with like crypto and a lot of the markets. We're in that 2000, event again. And that took 2 years to get to the bottom. And then it took, it was 2015 to get back, 15 years to get back.
Yeah. This is what I want. This is, again, if you're under 40, you haven't experienced this. This feels weird. This feels different. You might be scared. Let's just remind people that, good times never last. Bad times never last. And these are the times to understand markets. Don't react emotionally. Go shopping, have your buy list, maybe buy a business with terms. This is a time, again, where you can get creative and you could buy assets on sale. Let's just remind people of that.
Yeah, go study 2000, 2001 NASDAQ for crypto, because that's where we're at.
Yeah.
And then look at, 2009 for the rest, for Dow Jones and S&P. I mean, that's where we're at. And they did the same thing back then, but not as bad. So, I mean, that's just how these things play out. It's how it works. And, a lot of people are, a little skewed because of the whole 2020 thing. And we don't have that luxury this time. The Fed can't come back in with $2 trillion to rescue the markets. And they're not going to, because of where we're at. You just, until you get inflation back down to 2-3%, then maybe they can, switch it up. They can pull the foot off the gas a little bit as we, kind of work our way down. But make no mistake, they are going to get inflation under control and destroy demand. They have to. I mean, the
9.1, yeah, just
9-10% inflation does more psychologically, like you said, to people from anger and frustration and fear. And your question was about fear. Than anything that the markets, people that are making, or limited budgets and whatever, they could care less about the markets. They're trying to survive.
Exactly.
And,
I mean, again, people, I mean, I don't have these numbers off, but they'll be close. If you look at the stock market, the 1% own, like, I don't know, over 80% of the stock market.
Yeah.
If you look at housing, the 1% own, like, I don't know, 40%. So a lot more wealth dispersed in housing. But a lot of folks don't have money in stocks or housing, right? They're renters, and it is tough.
Yeah, they're just trying to feed the kids and, pay for school or whatever it is they're doing and just survive,
so
and so here's the thing. So you talk about fear. Fear is often because, people are afraid of something they don't understand, right? They're afraid of what they don't understand. A lot of times people don't understand what's going on. Why are we in this position? How did we get in this position? How did our government let us down? They don't know what they're doing. They don't know how to get us out of this. Is this going to correct, or is it going to get worse? So that's where the fear is coming from. It's uncertainty. People don't know if we're what it's going to look like for the next 2, 3, 5 years. I'm sitting here telling you, look how long it took. That's just markets, but that was also a recessionary environment. But for everybody watching, I mean, inflation wasn't a problem back in 2000 or back in 2000.
You have more tools when inflation's 2% than you do at 9%.
Yeah, you didn't have those issues. Now we have inflation, so there's only so much they can do. So they're going to have to let the markets suffer to get, the American people back and to get credibility back to the government, because people don't trust the government. They don't believe in them. They don't think the Fed has a grip or a clue what's going on, or Janet Yellen. They need to be removed, period. They need to be removed because they just have no clue what's going on or how to fix it. Yeah. And, there's a lot of, economists out there and academics and theorists that are, trying to, tell people what to do, or the Fed or whatever. And, you need some business people in there that know how to make a buck, and turn this thing around.
Yeah. Well, do me a favor, Greg, where can people find you?
GregDickerson.com. That's where all my info is.
Thank you, buddy.